Excellent. Everyone, welcome back to another episode. I'm here, as always, in Zoomland with my good man, Mark Rossano, the pretty face of Primary Vision Network and founder of C6 Capital Holdings. Mark, you're pretty much a veteran on the podcast now, but each time I have you on, there's always so much to talk about. A lot of interesting things happening on the energy front. Again, it's a pleasure to have you on, man. How is the New York summer treating you and your family so far? Let's start there.
Well, thank you very much. My friends are kind enough to tell me I have a face for radio, so it's nice to hear that I'm the pretty face because it makes me feel good at times. It's compared to you guys down there and a lot of the other parts of the country. We're pretty good. It's been nice. My kids are in swimming lessons. In camp. It's not too hot here, opposed to the heat dome you guys have been living in. So,
Yeah.
things are clicking along. Well, we have a lot of things going on in terms of travel, trying to finish raising capital for C6, getting that wrapped up because we have a bunch of projects and, a lot of things moving on as you said, the energy front. There's no shortage of headline risk and the other fun pieces when it comes to OPEC. So there's a lot to talk about for sure.
Yeah, no, that's fascinating. I'm interested to dive into it, but I'm super curious. So, there's been a lot of talk about the world's temperatures, and it's a debatable topic. But I mean, would you say it's global warming saying hello and like really making an impact, or do you think it's the natural cycle of the Earth playing chorus, or a combination of both? Like, without getting into the nitty gritty, but like, do you think this is like, hey, like it's not as bad as what people think? Like, what's your sort of take on this whole like heat? Because it's been unusually hot, and unless
Right.
again, it's just I find it interesting.
I think we have to appreciate El Nino, and every time I say El Nino, I think of the Chris Farley skit of El
Yeah.
Nino. But when you have something this strong, you're typically gonna anytime we've hit heat records, it's always during a very strong El Nino. So it's not surprising to see it happen at this point in time. There's a mixture. Everything is a cycle. Like the Sahara Desert, as far as we know, has been the Sahara Desert and a lush rainforest 5 times in the Earth's history. We know that there's been multiple ice ages, mini ice ages. Is the pace accelerating? It's hard to say just because there is additional carbon in the atmosphere. But then you look at methane, and the scientists have adjusted the multiplier effect that methane had. It used to be, I think it was 13. Now they brought it down to 5 because there's more methane in the air, but it's actually not causing the warming that they were expecting. So the problem is it's a very imperfect science. Can you say that the weather patterns are shifting? Yes. Weather patterns have shifted throughout our history. We had a dust bowl. When you look at some of the droughts in the Midwest, especially with some of the precipitation, you'll be shocked to know that some of these are the second worst, and the first worst was 1934. So we also are coming full circle on some of these things. Will it continue to be a problem? That's likely, just because we're probably in a warming cycle. And as you said, it's tough to have a debate on it. Just because everyone gets so political, but realistically, there is weather shifting. We've never built this close to the coast in our history. One of the things that I love is when in Fukushima, there was a marking stone, and it said, "Do not build below this." And the Fukushima tidal wave came up, kissed the stone, and then pulled back. There's what's called drought stones in the Rhine. And they've been marked, and this is some records that we've seen. So again, we've seen this before. The severity is getting worse. Yes, we are seeing weather pattern shifts, and unfortunately, it's unlikely to stop because weather is is fungible. There's things that move around. There's different shifts. So that's definitely going to be a problem, especially when you look at growing areas. When you start talking about like India just now banned the export of non-basmati white rice.
I
Like
saw
there's
that on
there's
Twitter. You mentioned that.
Yeah, like there's issues and food security, and as you've heard me rant on multiple occasions, food security is a huge issue for me. Like I think that there is a big problem in the world today that is either being ignored, swept under the rug, and now it's rearing its ugly head, and you're going to start to see what was it? Nigeria just declared a state of emergency due to the lack of food security.
Mm,
So again, there's a lot of things out there that are a concern that we have to really address, and the weather side is not making it easier.
no kidding. Yeah. So when we complain that the food truck is getting expensive here in certain parts of Texas or wherever, let's just remember some people don't have access to these nice little food trucks that pop up in the middle of nowhere. So, but with that being said, so you're actually or you've been involved with some stuff on the fertilizer side, right? And I don't know if you can talk about it, but I find that really interesting. I mean, obviously you've got your hands in all kinds of stuff, but I'd be curious, run through, because of obviously the challenge that we're going to be faced with, it does present opportunity for innovation to try and overcome these challenges. What is it that you're working on the fertilizer front or on the food front?
Sure. So one of the things with the private equity fund that we have, one of the verticals is fertilizer, ag tech, and I don't think people really appreciated how infrastructure heavy or energy intensive fertilizer really is. So one of the things that we wanted to do is look at byproducts. Like, what are byproducts of the energy space? What are byproducts of the metals and mining space? And is there better ways to utilize it? And we found a company called SulTech, which takes H2S or sulfur from the oil and gas stream and converts it into a sustainable, renewable, 100% organic fertilizer that essentially just takes sulfur and delivers it directly to the on the ground in a micronized form. So why do we do that? So if you look at a micronized sample, so we typically have anything between 5 and 600 micron, depending on what the client wants. And the benefit with sulfur is it sits directly in the soil and it allows the bacteria to break it down to create what's called sulfates, which is really paramount to a healthy crop. It increases the Brix content, which is just the sugar and flavor profiles and the amount of oils and minerals and vitamins that actually exist in the crop itself, because one of the problems is the caloric value of our food has also diminished outside of just the underlying yield itself. So what we do is we take this micronized fertilizer and we sell it to farmers. The benefit, because of what it is, which is 100%, or as we say, 99.98% sulfur, we can undercut a lot of the other synthetics. And because it is eco-friendly, you can't over apply it. You can't burn the root system. You can't damage the crops, because that has been an issue, especially when you start looking at Africa, India, places where people can't read. They may not understand the mechanics of some of it. So they can burn the root system and other pieces. So one of the things that it does is it reduces nitrogen needs by 40%, potash needs by 20%, water needs by 10%. And at the same time, it also increases the uptake of phosphates, which is another paramount and very important piece of the growing cycle, by 65%. So we, in short, we are about 60 to 70% cheaper than the alternative, and we increase yield by up to 40%. And because we allow the farmer to use less water, it's because of the way the sulfur interacts. Because if you put down AMS, it has typically a sodium binding agent, and it actually pulls water away from the system, the root system. So there's ways to address this. So not only are we a yield enhancement, but we're also a soil enhancer and a essentially soil repair program, because the sulfur going down allows and promotes natural bacteria growth. So we actually rejuvenate the soil. We bring the soil back to life. Because of just the fun things of chemistry, if you have a very calcium rich soil, because you were either irrigating from a dome in terms of groundwater, or coming from an aquifer, or coming off the Rockies, you have a lot of calcium. And so we actually bind with calcium and it drops out of the root zone. Same with sodium for people that have been using a significant amount of either what's it called? Desalinated water, or you've just overused and abused the synthetics. We actually bind with that sodium and can drop out as well. So we manage the pH. We help recover soils. And I'm not just making this up. We do have over 75 white papers, one of which is from BYU, where we actually increased the soil health significantly, and we outperformed our competitors in that by over 60%. And they actually loved it so much that they are taking non-arable land that has been destroyed, and they're just dumping our product onto it just to see if they can bring it back to life.
Wow.
Because the big issue is where we've ruined our soil. Like after over farming, over fertilizing for 60 plus years, we've essentially don't have topsoil anymore, and we've destroyed the ability to grow on it. And this is a way, amongst other things that we're working on. We're working with biochar. We're working with peat. We're working with some humics, some other pieces that are just a huge component. But this is close to my heart because we were accepted into the PACE program, which is a joint venture between the U.S. and the UAE government, due to what C6 has done in terms of moving things forward on the sustainable front. The benefit with SulTech is you're actually making oil and gas cleaner. So when you hear people talk about scope 1, scope 2, scope 3, we actually take a byproduct, which technically doesn't have a carbon footprint, and then we allow the oil and gas provider to not use acid gas wells because we recover that sulfur. So we recover the sulfur, you get the methane back, so you have another product to sell. We also allow you to recognize the carbon savings, the GHG savings on that whole scope, because we're increasing yield, which every crop has a very calculated amount of GHG that's absorbed even after it's processed. It's a net negative process in terms of bringing GHGs out of the soil. We're increasing soil health, which is known to absorb carbon. So again, we're absorbing carbon that way. And then the product is inert. So we can what's called share the tank, which means that we can be mixed with pretty much anything in either burn down, a sprayable, drive component. So then it's less passes, so you're consuming less diesel. And this is, so we call it flare to fork. Farm was it what was the other good one? There was food to table, ways to essentially try to show. And this is why we were in PACE. We've been shortlisted for COP28, which is in the UAE this year. So I'm actually going to DC tomorrow to meet with them once again. We're trying to show it's like, look, energy isn't evil. Like, we need energy, because the problem is sulfur. If you look at a bag, what do we need? We need nitrogen, phosphate, potash, sulfur. So sulfur is the fourth most important ingredient when it comes to growing crops. And guess where all that sulfur comes from? Oil and gas. So if we get rid of oil and gas, where are we going to get the fourth most important nutrient? And what is growing to be even more than just more important than the fourth is going to be a big issue in terms of replacement value.
Yeah. Wow. That's a lot to chew on, but I encourage the listeners, if that was a little much, rewind it and re-listen to it, because there is so much opportunity there, and what you guys are doing and the effort being put in. I know you're working tirelessly to make all this happen. But like, again, for the audience that's listening, I'm curious. So there's opportunity for, whether it be accredited investors or people, if folks want to be a part of something like this, you created a system or a program, and essentially you're raising to give that opportunity, right? Because all this stuff takes money. And so can you kind of explain the how it's structured in terms of if folks want to get involved, like how Joe, who's listening, can do that?
Sure. So we created a private equity fund that is focused in energy infrastructure. We have three main areas of investment: base load power, food and ag, and then industrial processes that are moving us further towards a sustainable future. And one of the things that we've said, and why I actually enjoyed being in the Middle East a lot, is because they appreciate that you don't have to go from 0 to 100. You can go from 0 to 60 as long as you're moving further and closer towards that sustainable future, because there is there is opportunity, and one of the things that we've wanted to show is you don't have to just lose money in solar and wind. You don't have to lose money in these pie in the sky projects. So one of the things that we do is we always take all government subsidies to zero. I took enough ethanol facilities into and out of bankruptcy and into receivership, just because when President Bush adjusted the blend ratios, all of a sudden, the stroke of a pen and your economics went out the window. So we want to make sure that these companies can stand on their own 2 feet. So on the baseload power side, we're buying hydroelectric assets throughout the U.S. We have close to about $1 billion of projects that are right there in front of us. We have them in kind of lockstep order. We have the ability to deploy hydrogen units on site because we own the power, we own the land, we own the property. So we actually just sell power to ourselves. There is a demand for hydrogen for those that are in the refining world. How important hydrogen is when it comes to cracking. So there is this piece, and then we do get mansion money to call it what it is. We do get, because we are 100% green because it is hydro. But the benefit is, one of the things that we've talked about is electrons are short in the world. For those that have been following the power markets, there is an electron problem, and so we're focusing on buying hydroelectric assets in New England, the Midwest, and the Southeast. There's never been a simultaneous drought in those 3 locations because of La Nina, El Nino. When you have one, you'll get drought in one area, you'll get rain in the other. So and then the other component, we have the ability to deploy data centers on site. And I don't think people appreciate that, data, especially AI, consumes 2.5 to 3 times the amount of electricity a normal data center does. So we're looking at ways to diversify the power, the revenue, which is a great opportunity. We went through SulTech. And then on the industrial side, one of the things that I love is when people talk about biodiesel and ethanol, it's like, so let me get this straight. We have a food shortage. We have people and countries that are declaring food shortages and a national security events. And we're going to take soy oil and put it into our gas tanks. And it's like, one, you have a massive amount of water contact. When you look at these assets from that farmers use, that construction crews use, you may have an engine that sits unused for 6.5 months, 7 months, and then use 17, 18 hours out of a day. If you put in those tablets that absorb the water, it gunks up the fuel injectors, it gunks up the system. So it's a non-starter. And I'm not saying that it doesn't have a place, because it does. I think Darling does a good job of collecting the waste oil, reprocessing that, because you're taking a waste product. It's just when you start looking at corn and beans, and people will then turn around and say, well, that corn isn't used for consumption. It's like, well, yes, but you could use that land better and more efficiently if you weren't feeding into what I think is a dead end. So we invested into a company that does renewable diesel. Renewable diesel is molecularly the same as petroleum diesel, but it has a higher centane value. So it's more efficient. The process also creates biochar. So what we do is we take wood and ag waste. So it's wood waste from either managing the forest. There's some other programs where a forest or willow is used to manage a nutrient runoff. Those are things that we're also looking to do. It reduces the GHG scores in the location by up to 7% because it is so efficient. Wow. And it throws off either renewable diesel and or sustainable aviation fuel. But the thing is, because it's molecularly the same as kerosene and diesel, you don't have a clouding issue. You don't have a freeze point, because that's the other issue. When you take biodiesel and drop it into a jet engine, there's a lot of water. What does water do when it gets cold? It freezes. So there's a lot of issues. And so what we know is we actually reduce O&M costs. We reduce the operating costs for these engines. And then the other that we're looking to invest in is Elementis. So it's a fantastic company. I actually met them just by accident, really, in the UAE, because they were also part of the PACE program. And what they do is they sit on bauxite. They sit on bauxite tailings. So after an aluminum facility takes the bauxite, pulls out the alumina that they want, the bauxite tailings go into tailing pits. And they have found that there's a lot of pig iron, there's a lot of rare earths, there's a lot of some alumina. And because it's a waste product, it's all green. And there's a huge opportunity to reutilize and more importantly, get those rare earths that are so desperately needed, especially like scandium. I'm sure you've seen in the news with gallium and the restrictions that China has.
Yeah.
So again, we're trying to invest in things that, one, actually make money. You know, the diesel is the same price as petroleum diesel because the feedstock is so cheap. You know, when you look at this, you're taking a waste product, so you're getting the product at a tipping fee and you're selling it into a market. So your cycle, you know, you're undercutting this on a cycle, the cycle peak and trough. You know, then you look at SulTech, much cheaper than the alternative. You look at hydro. Hydro is much cheaper than what's out there because it's a fixed cost. You know, it's a standing structure. Some of these facilities were initially built in the 1860s of wood, and they've since obviously been covered with cement and built up. But there's a lot of opportunities. So we're still raising. You know, we have a couple of million to go, and then we'll be able to close this one out. But you know, the one benefit is there's no cash drag because the moment the money comes in, it gets pushed back out. SulTech is we're going back and forth with an MOU in the Midwest with the Midwest because of the benefits that we provide. We have our site located and our feedstock wrapped up in on the Sustain Agro side. So things are clicking. We just need the capital, but who can't say that? I feel like everybody needs some capital.
I hear you, man. So with that said, what's I mean, a link in the show notes to put in there. I mean, is it best just if someone's interested, just to reach out to you via email, or like what's the best way to get started if someone's interested?
Yeah, email's the best because we have our
Okay.
PPM, you know, we have our pitch, we have everything that we've done. You know, one of the things that I'm looking to do, and I hate to be mean about it, but there's ESG, which I don't know if you know this, but I found this out when I was with the PACE people. So ESG is actually no longer the right way to talk about it. It's now sustainability. So
Okay.
we've created our program using what's the sustainability goals that the UN has outlined. So there's 17 goals that have been outlined, and we highlight how each of our companies impacts each. You know, we don't impact all of them, but we impact some of them, and we just because we wanted to show realistically, whether or not you agree with it, you're going to get penalized if you don't go down that path. So we're trying to show companies, especially the oil and gas companies, look, if you use us, this is the benefit you get. You can claim all of these sustainability goals and you can go to the government and show them what you're doing. The farmer, you can show them what you're doing. And we want to make it as easy as possible. So we can share all of that with you. You know, we use Brightspot, which is a company that does all of the math on the savings that we provide. It's all been audited, just because we want to make sure that this isn't just a joke, and we want to show that there's math behind this. It's calculable. We're pushing to make people recognize that, because especially with SulTech, when you use SulTech, you reduce nitrous oxide that gets emitted into the air. Nitrous oxide is 352 times worse than carbon. So shouldn't I get more credit for taking that out of the atmosphere? Yeah, the fact that I'm allowing a carbon, a flare capture, because I can then take that product and the company no longer needs an acid gas well. Well, you don't need an acid gas well. That has to have value for the local government, the local community. I'm reducing your flare, that has to have value. And I'm taking that methane out, that carbon out. So we want to show how you can do that, because most companies lose money getting rid of sulfur. We will buy your sulfur. We won't pay a lot because we're helping you. But it's when these are some of the benefits that we can provide when you're looking at some of these things. And those are what we can show. We have our returns. We've been operating for a year, so we can show you what the returns look like. We're wrapping up our audit, which is really important because we wanted to really streamline and show what our processes are, so people get comfortable that we're real. Yes, this is our first fund, but we've invested across 4 different dams under one entity. Across each one of these verticals, we have performance to show. We have an audit, so things are moving along.
Yeah, geez, man, you got a lot going on, dude. It's wild. And then in addition to that, you're constantly behind the camera doing your stuff for Primary Vision Network, which is, I think, one of the ways I found you originally. And what Primary Vision Network is, and you may see the logo every Monday for the folks listening at Follow Me, because I do my little market update, which has been fun, and I use your frac data, which I get from a website, but they credit you for it. But nonetheless, talk about Primary Vision Network. You guys, again, provide a ton of great energy and economic data and information, and you synthesize what's happening. But what's new going on over there lately, and anything fun and exciting on that front?
Yeah, so I do 3 shows. We do the EIA show. So what we look at I look at oil, refined products, really demand drivers, supply drivers. So yes, we look at storage, but we also look at what's happening in the floating market, what's happening in the physical market, what's happening in the futures market, because it's really important to weigh, because at times the futures market can be a bit disconnected from the physical market and vice versa. So we want to look at some of these implications, and it's enjoyable. It's a bit more energy intensive in terms of terminology. I try to simplify it as much as possible, and then we look at a lot of those demand drivers, because demand is always finicky, especially when you're looking at some of the flows. We talk about NGLs, and then on the macroeconomy geopolitical show, we break it down into global, 2 U.S. shows, a Europe show, and an Asia show, which is typically obviously heavy into China, just given its importance. And we highlight, what is happening on an economic front. We're not picking stocks. We're looking at how is the economy doing, and we break it. Obviously, we talk about the service economy, the manufacturing side of things, and look at these different pieces. And then we have our FSC show, or our frac spread count show, which is every Friday. That one is behind a paywall. That's where we look across 17 different basins within the U.S., looking at what is the frac spread activity. Is it going up? Is it going down? Where is it increasing or decreasing? What is driving that? So we'll provide another update on, EIA-like stuff. But again, that stays behind a paywall. And then I put out insights every Friday, which is just a written form where I try to summarize, I think, the key points. I provide, the different pictures and charts that you see, like that comes with it as well. And that's also behind a paywall, as well as the frac spread count data. We also have an NGL monitor. So we actually show you NGL supply and demand going out today, 6 months, a year, so you can actually model out. And so far, our average error ratio per month is only 1 to 2%. So we've had that pretty dialed in. So that's something for those that want to get more focused on ethane, propane, and it's funny because on the this most recent EIA show, one of the things, and I don't know if how much you know this about me, but I've always been very big on the NGL front, on the natural gas liquid side, and my view is that it's not. I believe that oil demand is going up, so I'm just going to put that out there. But I don't believe black oil demand is going up, because when you look at that 100 million barrels a day, there's a mixture of black oil and liquids. So, and I'm not sitting here saying that black oil demand is going down, because it's not. I just think that we've hit a steady state on the black oil side, but NGL demand is going up. Liquids demand is going up. We're bringing on more petrochemical capacity. We're bringing our demand for plastics is going up. When you look at solar, wind, EVs, hybrids, they have a lot of plastic in it. So I think that there is a big growth there, which is why we wanted to really get in front of this NGL market. What does the supply look like? It's very opaque. It's not one that's easy to crack, but that's something that we've been pushing as well, because it's so important for the future.
Yeah. No, so when you say the black oil market, on the consumer front, like, what do we on a daily basis know as black oil? Like, are you talking gasoline? Or what do you, okay.
Yeah, so I'm talking gasoline, diesel, or distillate. I'm talking heating oil. Those are things that you're seeing essentially flatline and actually start to roll over a bit. Gasoline demand, I think it's forever changed, and I don't mean in like, then the fact is like, well, gasoline is forever changed, therefore gasoline demand is going to fall 1 million barrels a day. No, I'm not saying that. I'm just saying that when you look at the changing guard in terms of hybrid work schedules, the shift in miles per gallon, if you look at the average car in the US, it's 13 years old. So as you walk up that scale, the average miles per gallon is going to improve. So even if people drive the same miles, they're getting more efficiency. When you look at distillate, we're trying to replace distillate or diesel with natural gas where possible, with propane where possible. And that's where it's not all going to go away. We're always going to need diesel. We're always going to need gasoline. We're going to need what's called drop-in fuels. But there's ways to address that. On the fuel oil side, when you look at bunker, there's more methanol being used once again. You're seeing more LNG capacity. So again, it's just more along the lines of we've kind of steady stated that. And it's not that it's going to fall, but it's just, and I'm not saying it started now. Like I do think there is a bit of an increase in black oil demand. It's just not going to grow to the same degree that liquids demand is going to grow.
Got it. So out of that, call it 100 million a day that we're consuming, what percent of is there any sort of guesstimate on what percent of that is black oil, like as it stands today?
Yeah, it's about 60 to 65%. I would argue it's probably closer to 65, 67% of it is black oil in terms of what is going into the petrochemical world, what is going to the refining world. When you look at the refining side, that's really how you're going to see the biggest piece of it. But even when you look at the Middle East, they've gone from using fuel oil, and not to say that they still don't use fuel oil in their electrical generation, but they're converting to pipe gas. It's just because it's so much easier, it's cleaner, it's cheaper. It's and it's just something where then they can take that and they can export that product. So we're in the process of seeing a very big paradigm shift in terms of who has refiners, where are those refiners built. Unfortunately, the U.S. Has slipped behind on refining. We haven't built a new refiner since 1978. We have added processes to current ones, but when you look at all the new builds, they're in Asia, mostly China. They're in the Middle East. A lot. The one in Kuwait just turned on. Excuse me. So you're starting to see a pivot where we are going to start importing more product because we're just not seeing, we're shutting down some of these facilities, which has stalled. And I don't know who thought it was a good idea to rely on China for refined products, as well as, so now we're going to rely on China for refined products, for copper, for rare earths, for solar panels, for pretty much anything that goes into the lithium batteries. It's like, so have we thought this through on a structured supply chain basis in terms of density, concentration? So it's just a funny little backdrop.
No, it is. It's but I think to your point, I think hopefully, and I've heard that there are companies that are doing some big things that aren't quite on the ground in operating, but to reduce our dependency on China. I was listening actually to COB Tuesday, a gentleman Maynard, I forget his first name, but or maybe that is his first name. But anyway, they were interviewing a gentleman named James Calloway. He's with Ioneer, and apparently there's a huge operation that they're just kicking off, a facility. I think it's like over $1 billion facility that they're going to be doing like lithium mining in Nevada, I think. Which again is challenging here in the US with permits and all the rest of it. But it does sound like I think a lot of folks here in the US understand that the dependency on China poses a huge risk. But it takes time to reduce and get away from that. I mean, again, I listen and I'm more headline and try and read articles. I'm not in the weeds per se, but it does seem like there's efforts being made to pull away from China, but because of the cost and the benefit there and the, I guess, maybe convenience, it's obviously extremely difficult. And then it's how capital intensive it is. To your point, everyone needs more capital. If we had all the money in the world, we could do everything here and everyone would be happy, but that's just not the case. So I guess in saying that, the question is, do you see on a macro level people really making effort to try and pull away from their dependency on China, or do you think it'll just be forever a thing?
Well, there's now a marked effort to adjust. Like one of the reasons, well, I mean, I believe diesel is going to be used 40, 50 years out. I mean, that's why we're investing in renewable diesel because, to your point, we need to find solutions. And our solution is we have all this ag and wood waste, which is just sitting there and rotting. So let's turn it into something. Let's turn it into renewable diesel, biochar. Biochar can be used into graphene. Graphene can then create more structurally sound and increase the tensile strength of cement and asphalt. So there's ways to address this, to your point, but one of the issues which has started and one of the things that has come to pass much faster with COVID is the nearshoring, onshoring pivot. And to your point, people are starting to recognize that, the labor disconnect has gone away. It's no longer labor efficient to build in China and then come over. It's no longer, let's call it, it's getting more and more politically unstable. What is the influence of the CCP? Why do I have a CCP representative that I have to hire and have in my company? So you're starting to see this pressure point, and there's that move to, well, let's get closer, let's diversify. So to your point, they're entrenched. We're entrenched with China. China's entrenched with us. There's always going to be, let's call it, mutual destruction if one goes against the other. But when you look at the new components and the new pivots, and do you need 15 factories in China, or can you have 5 and then have 5 elsewhere? You've seen Mexico get some additional capacity. You've seen India. You've seen Vietnam. And I think you're going to continue to see that pivot. But the bigger issue is rare earths. The bigger issue is, how do we get some of these things locally once again? Because there is a commodity shortage. That's why, even though we can go back and forth on, are we in a recession? Are we not in a recession? Even if we are, and demand comes down, the supply is tight. You look at crude, Brent right now bouncing around 80. It's like, well, yes, has distillate demand, has gasoline demand gone down? Well, it has, but OPEC's also cut. Saudi Arabia has an additional voluntary 1 million barrels. Then you look at crude differentials. The problem is there's multiple different types of crude out there. And luckily, when in my past, I've owned about, I think, 38 of the, or 37 of the different crudes at different times. So it's like a lot of people don't appreciate. They just say, oh, crude short, therefore buy Brent. It's like, well, Brent is light sweet. Do you really mean that you want to get heavy sour? Because heavy sour, medium sour, that's where the problem is. And we have to get smart about where are we getting this crude? The U.S. was built to run heavy crude, and shale is not heavy crude. So we have to get serious, not only about, to your point, mining lithium, mining copper, mining rare earths, but back to basics. Like, where are we going to get our heavy crude? Our heavy crude is in the oil sands in Canada. It's in California. It's in the Gulf of Mexico. It's in the Mayan sludge down there. It's in Venezuela. It's in Iran. It's in Iraq. These are areas that we have to get serious about. And obviously, Iran and Venezuela have their own little picadillos with it. But that's why, all of that has to be looked at holistically to appreciate how are we going to function as a nation, because we will need oil, we will need refining, but we also need alternatives. And where are we sourcing those alternatives?
Yeah, no, that's you bring up, I mean, again, a lot of great points, and it sounds like people are working on it. Again, that's not necessarily my sandbox that I play in, which brings me to my next question on U.S. land here. Earnings season's coming out for everyone. Halliburton, Baker Hughes, Liberty came out yesterday. It looks like a lot of the E&Ps are going to be coming out over the next few weeks. Curious, what's the overarching theme that you think is going to be discussed as we move towards, into Q3, Q4, and then into next year, which is election year. So that always plays an interesting part of this whole thing.
Oh, absolutely. I think it's all going to come down to margin. I think the E&Ps, it took a while. but they've learned that don't drill through anything. Actually, it matters if you make money. So
Yeah.
I think the big focal point is going to be product mix, because some of these guys are getting more and more liquid. They're getting more and more gassy. So I think it's going to be really important of what is the crude cut, what is the liquids cut, what is the gas cut, and it's going to come down to margin. Margin is going to be a big component. What was your cash flow positive, cash flow negative? Like, you're just not going to get the benefit from an E&P perspective. And then on the mid, I shouldn't say midstream, on the frac spread side, it's going to be margin, but it's also going to be utilization rates, because we've seen activity slow down a bit. You've seen some pressure points in terms of equipment. We have this attrition, but it really isn't financially feasible, or at least financially responsible, to go out and buy new equipment. So are you repairing it? What does your order book look like? The supply chain has caught up with itself to a degree. There's still some delays especially across some key parts. But does it make sense to order new spreads? Like, no one's going out there and saying, well, Brent is 80, crude is 76, WTI is 76. Therefore, we can go out and order 5 new spreads. They're not doing that anymore. That's like, okay, well, if I order these spreads, who's paying for it? Because when I take delivery, I need a 2-year contract to deploy this in the Permian, in the Eagle Ford. So you're getting a bit more of this kind of, standoff, if you will, between the two, because they are tired of taking the margin hit every time crude goes down and not getting the same benefit when crude goes up. And it's a matter of trying to manage their portfolio. One of the things that was nice on the natural gas side, when natural gas prices went down, they decided to stop drilling dry gas. It's like, it took we're at year 10. To figure this really started to hit mainstream 2013. And so it took about 10 years to recognize that when gas goes below 3, don't drill dry gas. So you're starting to get some of that understanding in terms of how to try to play the system, how to manage the system. And I think that's going to be a big focal point.
No, I would certainly agree with that. When we look at frac spread count, according to your work, where it's sitting at 263, which is quite a bit below, around around 35 below our peak. I think we peaked in December, and I think we tickled 300, and then it's been slowly heading downward. I think it jumped up again in May, but again it's down. Rig count's down. Duct count is low. You're starting to see some builds on the gas side. But what I find interesting is everyone's quite I say everyone. There's certain organizations that are optimistic about U.S. production growth, although when you consider natural decline rates and we're sitting at 12.3, how are we going to all of a sudden increase production? Like, to me, it doesn't make sense fundamentally. And physically, and so I just there's a disconnect there, and so ultimately, where does U.S. Production end the year at, and will we ever get back to that 13, 14 if we just exclude Gulf of Mexico? If all of a sudden that comes roaring back, but you know what I mean? Like, I just don't I don't see it right now.
One of the things we always try to give people forward looking, and that's one of the things that I try to do on the shows, is try to be forward looking, just because everybody wants to talk about today and yesterday. I want to talk about tomorrow and the next 6 months. And so last year, usually in October, we start to look at what is the next year's exit rate going to look like. So our view was that we were going to have an exit rate of U.S. production of 12.7 million barrels a day flows, and we had to take that down. We started to make the adjustment in May. We said that, look, 12.7 is unlikely unless we get some massive surge in August and September and October, which, to your point, is unlikely, because why would you do that given where things are? So realistically, we adjusted it to about a range of 12.5 to 12.6 million barrels a day. Right now we're probably just over 12.4. So it's tough, because, to your point, it's really hard to climb that gap, especially when you see some of these areas are getting a bit more gassy, a bit more liquid heavy, less oil. So you're not seeing the same level. But at the same time, we have had additional efficiencies, whether you call it dual frac, simul frac, that is taking up some of it. So some of these frac spreads are more efficient in terms of what they're producing. So even though they've come down, they're actually pulling more out of the ground. But then when you look out, I describe it as a manufacturing the manufacturing formula. It's no longer, let's go frack this well this way and see what happens. It's getting more into a repetitive motion, so we don't need the same duct count. We're getting into manufacturing mode, which is a good mode to be in, but it's not going to send us to 17 million or 14 million. Like realistically, I think that we peak at about 13.3, maybe 13.5. And the issue is the demand side. The world doesn't need all that much, all of our light sweet. So you also have to look at, well, who's taking what? Our refiners are tapped out for the amount of light sweet we can take. Europe has helped us because with Urals gone, with other types of crudes in shorter supply, they've been buying a lot of our light sweet. WTI, Houston is now, when you look at Magellan East Houston, is now part of Brent, or I should say dated Brent. So there's a certain amount of additional flows that will go over. And again, these are key pieces, but does the world really need 17 million barrels of our light sweet? No. And that's where I think we get to that steady state, and I think we just go flat. Do we go flat at 13.3, maybe 13.5? To me, that's a coin toss. I'd likely stay a little bit on the lower side when talking about crude, but when you look at LPG, our LPG exports have been lights out. That has really saved us because our petchems have cut utilization rates. Ethane exports have increased. The benefit for us is when you turn on an ethane cracker on the petrochemical side, it's actually fairly inefficient. So ethane gets cycled back into that wasn't cracked, gets cycled back into the cracker. So on average, you have to have a minimum of 87% ethane in that cracker. So if you build one that's ethane based to make ethylene, you're filling it with ethane. So we have kind of that benefit from our perspective. And then we have new LNG capacity coming online, which I think it's 6 MTPA starting next year, which will be another benefit just because the world needs more LNG. I think that is a good way to address a lot of the green issues, if you will, or, polluting issues. And those are things that we're in a good position to address. But to your point, we're not leaping up to these crazy levels. I think it's now just more of a steady state activity level.
Yeah, no, that makes sense. And you mentioned even just with sort of production efficiency and the well productivity coming out, it's hard to tell. But looking at even just what was recently released by the EIA, they reading. I don't know where that came from. Bear with me. I don't want it to mess up the recording because it's done that before.
Oh, sure.
I'll edit that out. There we go. Okay, still recording. Last note on that, and then we'll run. You're looking at the Permian. Obviously, rig counts drop, but when you look at oil production, it's actually saying the Permian next month, or they're projecting it to be down 11,000 barrels per day on the oil side. But the funny thing is they're actually predicting it to be up 36 MCF per day. And so again, we're getting more gassy. And I kind of laugh. It's like right now we talk about all this associated gas coming out of the Permian. At one point, we talk about the associated oil coming out of the Permian because it's going to become a gas play if this trend keeps going. Hopefully Mexico can take a bunch of this gas that the Permian doesn't know what to do with. And I know there's plans in place for that, but nonetheless, we didn't even talk about gas markets, which I'm sure could be another hour. But Mark, I want to respect your time and let you run. With that said, any closing last words? Any food for thought? Anything you didn't mention that you'd like to share with the podcast world?
No, just to follow on what you talked about, one of the things that I've always joked, and which I think is the truth with the U.S. businessmen, I've had the opportunity to be with these people because my running joke is I started a private equity firm because I hate private equity. I don't like the idea of taking a company, firing, 20% of the people, taking it abroad, dressing it up and then selling it for a stupid margin in 2 years. I believe in building companies, building growth. And that's one of the things that I like to say is when you look at, as you talked about associated oil, it's funny because I always joke the US is good at two things, arbitrage and inventing things.
Yeah.
And if anybody's going to invent a way to unlock the crude that's stuck in there, to make all of a sudden I do think it will be someone on the ground that's just tinkering. I've had the opportunity to invest in companies recently, SulTech and one of them, where the invention was in a garage. I mean, like, it's so fascinating when you look at it, where somebody took something that was tinkering, took it into a garage, perfected it, and then scaled it up to a commercial level. And I think that there's a lot of that out there that we don't appreciate. And I'm including myself. Like, I'm always amazed at the things that the U.S. ingenuity, Canadian ingenuity to our brothers to the north are capable of doing. And I love it. And that's where it's like bringing it to life, bringing it to market, because I know markets, I know finances, I know ways, I know macroeconomics, but I'm not an engineer. I'm not going to build it, but I can appreciate it. I can explain it to the other people, and then I can, paint that picture and help it grow. And that's, I think, a lot of the fun that's going to be had over the next decade is addressing this energy infrastructure, because the government's not coming to save us. We have to get serious about how are we going to address this growing shortage of energy infrastructure, especially across electrons, across food, and viable fertilizers to repair soils, vital drop-in fuels that are running short to what we've talked about our reliance on China. So I definitely think that there's a lot to be done over the coming few years.
Nice. Well, it's I know you're working with a ton of effort and some good people to make all that happen. And hopefully there's someone in the audience that wants to get involved as well. I'll put the link in the show notes. That way, if people want to connect with Mark, it's easy, one click of a button. And again, thanks for everything, Mark. It's always such a great pleasure. Best of luck with all your ventures. And for the audience out there, really appreciate the support. Get a lot of good engagement, folks reaching out. Again, I'm just here to educate and entertain, and hopefully a little bit of both. And with that being said, everyone, always remember, everyone deserves access to energy, and we is greater than me. Thanks, everybody.